Hello friends, welcome back. In this quick demonstration, we're going to talk about the Tesla quarters and the rhythm it has in our markets. For demonstration purpose, we have picked up the 5-minute chart of ES. Now we are just going to use what we call as the new vibration for a given day to project the price targets for the given day using the quarter point methodology as it translates to Tesla models. This vertical bar is the transfer of energy from this zone to this zone, from this day to this day. Each day has its great vibration. If you look at the time, 10:06 is a Sunday open. So market has obviously gone sideways. You don't know that, but we have the levels. So let's start with demonstration of Sunday open vibration right here, open on Sunday, and we know where market is going. You can see 369 and addition and subtraction are the keys of these laws. 10 minus 8 is 2. It was attracted to that energy. 8 and 7 is 15, is 6 divided by 2 is 3. That's why you have this 3 being in that attraction. And we also know where market is going to close on Friday, which we cannot demonstrate in public. So let's remove this. And come back to the main point that all we need is a single line for a given day, which is defined by the pivot. That's all you need. This is the DNA for this day. It doesn't have to be small one. It will give you small targets, but this is seem like a prominent DNA. We will just do it on this one. As you can see, this is a prominent low to high. Just at the beginning when the energy has shifted. This is high to low just after when the energy has shifted. So what we're going to do now is bring our 369 level 2 model here, and what we just need to do just drop that tool at the beginning and end. And before I do it, I'm trying to explain that what you're about to see. So when the tool is dropped, sorry, this is level 3. It doesn't matter which level it is. You have to progress from level 1, 2, and 3, because you have to understand a lot of energy laws as you certify yourself through level 1. You should be able to make profits on a daily basis after you certify in 5-6 months in level 1. Then you have to understand a lot more internal energy and dynamics in level 2, and then level 3. It goes on like this for a reason. There are 99 tools which does answer in a hedge fund world different scenarios, being a quantitative engineer, right? The question comes, we have using a different way of thinking and bringing all the different esoteric and hardcore sciences together. So it has some scientific bias behind what I'm about to show you. It is not just some chart or some tool which is dropped, right? So back to the point, when we drop these two tools, we'll drop it here and we'll drop it here. Our expectation is that after doing all, we take this range and we convert it into the Tesla dynamics. The fourth quarter of that should give us the endpoints. It doesn't mean that only fourth quarter is going to work. Every quarter is going to work. So now let's just really do it. Nothing much to do here, the way we have, because our focus is to make money. Our focus is to make money. So once the tool is dropped, it demonstrates the vibration dynamics. So I just refresh the tool and I zoomed in. You should be doing this on a squared chart, because remember, we are using three things here: the range, the astrophysics, and geometry, all combined together using the mathematical principles of 369. So what has happened? So this endpoint, you can just see the hotspot here and here, right? The red dots show up here. This range has now been converted into the map for the given day. Where we are going. And now there are two boxes here. One is the red one, and there are other small ones. So they will act as support and resistance for the entire day, as just you can see. Now, how are these different from any other approach? The answer is pretty simple. These are market generated. Market showed its hand, just like here I just showed you. Just a small DNA for a given change of energy for this given day. It exposed itself what it wants to do. Right? It's exposed itself what it is wanting to do. And I said this bigger box is 1, 2, or the fourth quarter, right? So these are quarter of energies, and they will all have this vibration. This is 75% of the vibration for this day, and it ended there. So, and if you see here, if you count these boxes, 1, 2, 3, 4, 5, 6, 7. So 75% of these, 25, 25, 25, and 7th box range of this internal system tells you where market is trying to do its business. All right, so let me remove this and do it for one more day in the next day. All right, so we dropped the tool here, right here, the hotspot, just click, and that's it. 1, 2, 3, 4. The complete square has 4 sides has happened. Squaring of this range has taken place here using the Tesla vibration model. And we also learned there are 9 numbers, and in between these 9 numbers there are 8 holes. So 8 and 9 boxes are also very critical. So we count it here: 1, 2, 3, 4, 5, 6, 7, 8. it is doubling of the square. Half of that is someplace, right? And then we have again same ideas. These are going to be your vibration level. The market itself is telling us. Now this chart has to be squared. So you're squaring a chart, first of all, for the instrument where you're applying this, and you're trying to, now think of a cube. Square has 4 sides, right? Times 4 is 16, which is 7. So because 4 times 4, 16 is 6 plus 1 is 7. So cube. Now what can happen is, as the market is rotating inside the cube, you have to think, imagine 3D. So what's going on? The market is since we are forcing the market to be compressed in 2 dimensions, it is moving in 3 or maybe 4 dimensions. So if you imagine that you are inside the cube and market is rotating, it may be giving you illusion of it is flat, but it is, if you think about 3D, this may be coming towards you. This may be, coming towards you. This may be, I hope you understand, this is like giving you an illusion which you cannot see in the 2D. So you think what 4D or 3D is mapped into 2D. All right, so we don't have to get into too many details on this. The ultimate point is all these will become your support and resistance for the day. Market has spoken. Market is given us the idea what it wants to do just at midnight open, right? So there's nothing random in the market. You can't see. Now it makes sense to add an oscillator here. Let's add balance imbalance. We have 4 oscillators in the ecosystem. That should be enough because it tracks all the great things you ever want to know. Now this is telling us which side of the equation market has become imbalanced, and we take that initiative. So now the squaring is here. So 1, 2, 3, 1, 2, 3, 4. So 4 sides are now of a cube flattened, and there are 2 cube sides now. That's all you have to worry about, because we are here not to be a scientist, which we are here to help you get rich if you're interested, and that's all there is to it. So there it is, right? So these levels. Let's say market comes here, okay, you're looking to take a shot in this area, and you got an opportunity to go short. Now it moves very fast, boom, boom, right? Something happened, but again, it is still bound by the laws of nature. So this is our box. You can just see here, right? So again, 1, 2, 3, 4. Look at the end of the box, which is again, you got the idea what is going on here. So once we have all this, now you have a context. What are you going to do and how you're going to do is very simple now, right? Right there. This is the reason why market is vibrating right here. Up and down and up and down is all bouncing from these levels, and then what you have is an oscillator. This is good enough. We have 3 more if you don't like this one, but there are 3 more. Because everything we're doing is based on pure price dynamics. We use this oscillator because we want to see how off are you from where the price should be. That's why it's called balance imbalance. And being a mean reverting market, it makes sense, but only at the critical levels. So you can mark these squares and quarter points, and you expect market should be giving you some profits in this zone. So market came back down, and then it came back up, it came back down, it reached a certain square, and then what happens next? It rallies, which is great. But if you have these levels marked, so you'll be only trading at these levels, and then you see what is the context. So I think that is all I wanted to share, that all these vibrations, we know them. And it takes a little bit of effort and to pick all this vibration if you want to trade like that, scalp all these points, right? Or you can just wait for the extreme levels. And you can start your hedged, biased trading at these levels. So if you're expecting that, hey, 1, 2, 3, 4, I'm going to be doing here, what are you going to do? You can do a lot of things here at this point. Start doing something at this point. The market is going here into our levels. You can start taking the opposite side of the equation with pre-hedged portfolio. So how do you do hedging at this point? That's a big discussion and class in itself for private students, but you can think about just buying puts, if nothing else. So remember, everybody can see the previous day's highs and lows. You can see here the top and bottom from yesterday. It blew through that because everybody was shorting at this double top, and they blew through this. Everybody was shorting at the double bottom, and going long at the double bottom. It blew through this, right? Because people don't have 4 or 5 point, but that is that their targets to take that kind of loss with 10 contracts, right? So what do? Don't trade in a specific strategic way that you don't put any stops. That is where you need hedging. And the hedging only works very well if you know you're at a critical extreme reversal points, and then you bias it. So that's, I think, all we wanted to talk about this, and it goes on and on and on. This tool was built 2012. It's going on for almost 10 years non-stop when we discovered this rhythm of the market, and it's never going to change. Now, as we also understand, based on the market profiling scenarios, that 3 times a month, 2 times a month, market can just go straight, boom. There are a few days as you just go back and build your statistics, and they just take initiative and they just go and jam the market. It could be news driven, interest rate driven, CPI report driven, fundamental change, some political news, geographical news, socio-political news, right? They jam it one side they jam it. Then they don't move. So what we have to do as traders is to trade the extremes. Yeah, you're great if you caught this 3-4 points, but what about if you're catching all this whole huge thing? 50 points, 60 points. So you should try to catch the day's range if you can, and that's the whole idea of becoming an effective day trader. Thank you so much.